We're sitting in the lovely Hotel Hermitage overlooking the harbor of Monaco. And we're going to have a few words with Stephen Catlin, who is the chief executive of Catlin and has been in the insurance business for quite a while and knows quite a bit about U.S. markets, London markets, and markets all over the world. So tell us a bit about what's going on with Catlin these days.
It's been great fun. Catlin is 29 years old as a company, and I'm ashamed to admit that in 3 weeks' time I've done 40 years at Lloyd. So I used to say I'm the you kid in the block, the T-boy, but it's getting more difficult to sustain that argument at the moment. And when we started Catlin back in 1985, there were two of us. I think we wrote $5 million worth of premium, and we had £25,000 worth of paid-up capital. If you fast-track to 9/11, we had less than 100 people. We wrote about $430 million worth of premium. 97.5% of our premium was written in Lloyd's. Mm-hmm. Go to today, we now write $5.5 billion worth of premium.
Wow.
We've got 2,250 staff. We have offices in, I think, 60 offices in 22 countries.
Amazing.
And really, since 9/11, we had a vision actually in 2000 that we needed to go global because London would increasingly be concentrating on wholesale business, and if we wanted any retail business or mid-market business, we had to do it in situ. That vision has taken us 13, 14 years to actually get there, and it's been tremendous fun, actually, huge fun.
That's good. But you were in the United States. When were you first in the U.S.?
We had our first office in the U.S. actually in 2000,
Okay.
actually, and I was actually in Houston, in that office, on that dreadful day of 9/11.
Okay.
The first time actually that I travelled with my number two, because we thought we used to have one person at home base. By luck, it was one of the best things we ever did, because we were able to actually drive all the things that had to be done post that dreadful loss from Houston together, so we could spend time face to face. I remember very well getting up at 2 in the morning to go into the office in Houston to deal with London. And I tell you, a Houston office in September with no air conditioning is not the greatest place to be.
No, no, it certainly isn't. I would like to ask you also, you have done some absolutely marvelous scientific surveys, the Arctic and in the Great Barrier Reef, and now you're doing one, I believe, in the Caribbean. What prompted you to begin those projects?
Well, a colleague who works with Jim joined as head of marketing. And I said to him, I said, look, we need some brand awareness. We're known in London, we're known in Bermuda. We're not that well known outside of London in the UK, actually. So how do we get brand awareness? And I said, look, I don't want to sponsor a football team or a rugby team or the opera or a museum or whatever. All that stuff is great. I'm glad other people do it. What I want to do is do something which is relevant to our business and has some kind of social value to it. So I sent him off. And after about 18 months, he still didn't come back with a reply. So I said, I would like a reply to that question at some point. I'm working at it, Stephen, he says. Within 3 months or so, he came to me and sat down and said, I think I've got it. He put this proposal in front of me to do with the Arctic survey. And I read it carefully, it took me about 15 minutes. And I said, yeah, that's it, that's the one we should do.
Yeah.
Ticks the boxes. It's relevant to our business. It has I think, an excitement to it that will interest a broader population. And there's some data that needs to be collected, which has never been collected before, that will help the scientists make better judgments. That's their job, not ours. We don't claim to be scientists.
And somebody has to go find the data, though.
Somebody has to go find it. And you know what? There aren't many scientists that like operating in -50.
There's too many people.
I went up there actually to have a look at what they were doing, and it was absolutely fascinating. We did that for 3 years and came back with some very useful data, demonstrating actually that the thickness of the ice was much thinner than had been previously anticipated, which meant that the probability of the Arctic being open to shipping is going to happen in our lifetimes, whereas I think maybe we thought it might happen in our children's lifetime.
Haven't they already sent ships through during the summer?
They're starting to do something. I mean, but I think it is likely that the channel will be open for longer and they'll be bigger over time. So it could well become a viable shipping route in time. But there are consequences, environmental consequences arising from that. The release of methane gas, all this stuff. From that, after doing it for about 3 years, we didn't really feel that we could add much more value at that time. We collected the data that we thought we could collect usefully, so we said, right, time to move on. And quite by chance, actually, one of our Australian colleagues was having a barbecue in the backyard next door. They met somebody who was interested in doing this reef survey. And from a chance from that conversation, he met another person from actually Google. And 2 years later, it took a long time to get there, we agreed with Google that we would actually start doing some research on the Barrier Reef. Now, what's happened is that technology has increased hugely in so many areas in our lives. It actually increased a lot in terms of what they could do underwater.
Really?
And you know that street survey that we all know about in Google?
Yeah.
Effectively, we're doing the same thing, only underwater.
Wow.
And they can take a measurement along a kilometre of reef at a certain depth. They take 10,000 pictures on the way through, 360-degree pictures, and they can measure it. Then they can go back in time and do exactly the same photography at a later stage to see what the deterioration would be. Furthermore, they actually went down beneath the depth at which you and I could dive, lower. And in the lower reef, they found very little disturbance. They actually found 2 new types of reef they didn't know existed.
Because it was so deep.
Yeah. Higher up, there is clear deterioration of the reef. Is it man-made? Is it due to the acidity of the water? Is it due to the increase in temperature of the water? You know, these are the questions that the scientists need to look at. But there's only half the reef there was, I think, 50 years ago.
Oh, really?
And reef is an important thing. Actually, 85% of heart drugs have coral reef in them.
Didn't know that.
But it's also the first line of support to coastal, obviously.
Sure.
And it's the beginning of the food chain for many forms of seafood. So it's an intrinsic part of our environment, which is clearly deteriorating and at risk. So what we're trying to do is help the scientists understand the pace and nature of that deterioration. And then it's down to them to decide what, if anything, is man-made and whether or not we can change behavioural patterns to improve our lot. I mean, it's going to affect our grandchildren rather than our children.
Yeah, if there's a solution, you need to find out what it is.
Yeah. And it's been fascinating. I mean, and the interest shown in it has far outweighed what we thought it would be. And the number of hits on the website are extraordinary.
Oh, I follow it. I think it's wonderful. Yeah. I mean, I write articles about it too, but I'm just very interested in what's going on.
And then once we've done the Caribbean, we're going to go over to Asia and look over there. And we'll probably do this for, I don't know, 4 or 5 years until we can no longer usefully collect data. And I think it's our way of saying, look, we need to put something back into society. Clearly, it indirectly is going to help us understand risk, which is the business we're in. And hopefully it will help governments think through what they should and should not be doing.
That's always a problem. Let me ask you this. There's an awful lot of discussion at this year's rendezvous about alternative capital, in other words, money from the capital markets that has come into the reinsurance industry and into the insurance industry in general. Do you have any thoughts on that?
I think capital is an important part of what we need to have to do what we do as insurers. The need for insurance is increasing globally. Economic values are increasing, activity is increasing, transit's increasing. So new capital coming into the market is, in of itself, is not a bad thing. It's a good thing. In fact, it's a necessity. I think as a carrier, if I can't cope with competition, why should I be there?
Okay.
So is the competition the insurance company down the street who's been there for 100 years? Is the competition the new startup Bermuda that came around in 2002 or 2006? Or is it alternative capital today? I don't see much difference actually in that sense. If it stabilises the volatility of pricing in the reinsurance market, that's a good thing. And like any other form of capital that comes into the marketplace, if the people who are using that capital do so ill-advisedly, over time that capital is going to lose money and it will go. If it's managed properly, they will stay. Now, the two types of capital coming in generically, there's the sort of short-term money, opportunistic, partly driven by low interest rates.
Of course.
And then there's another type of capital, for example, like the pension funds, who are saying, you know what, as part of my portfolio, maybe if I had 2% of my portfolio in this type of risk, it's pretty much uncorrelated with anything else I do, and it's giving me a yield which is quite attractive in this day and age. So, on balance, in the round, I think it's a good thing.
Yeah, but money is always useful.
Yeah.
Now, I wanted to ask you what, there's been a slowdown or an economic difficulties in some of the emerging markets, Brazil and China, South Africa, some of those. I know that Catlin has probably plans on further expansion in emerging markets. What's your feeling on it?
Emerging markets have challenges that established markets don't have economically across the piece. And as such, as insurers and reinsurers, we have further challenges in the emerging markets outside of what we have in the established markets. I think if I look at it in sort of short-term 5-year growth for Catlin, the vast majority of our growth is going to come from Europe, States, UK. But as you rightfully say, there are some massive economies out there. Brazil, China. I mean, China's population is 4.5 times the size of America.
It's pretty big.
The top 5% is where all the money is in China, is bigger than the population of the UK. It's a big country.
Yes,
it's had massive assets. It's got massive resource, and it's going to be a powerful nation in the future. If you want to have a global business, therefore, I think to ignore the emerging markets is somewhat of a mistake. Does that mean that you should go in there and buy market share, come hell or high water? I would suggest no. What you want to do is, like in any other market, is go in slowly, quietly, dip your toe in the water, understand how the local market works, and build up the relationships. And in time, you will be rewarded for that.
I see. Well, you do business in China. Do you do it through Lloyd's, or do you have your own branches there?
We do it through Lloyd's China. We have our own rep office in Beijing. And we have a relationship with China Re, which is one of the major reinsurance companies there, who actually provides capital to us to write on behalf of them from the Lloyd syndicate.
Okay. Last question. You've been coming to the Reinsurance Rendezvous, I assume, for a very long time. What do you see in it that is so valuable? Does it work?
Well, I actually haven't been going for as long as you might think. But
I'm sorry.
I avoided going for as long as I possibly could in some ways, because I knew that once I started, I'd have to continue. And indeed, I think the relevance of Monte Carlo has increased hugely. I mean, really since 9/11, actually. And I actually first came in, I think, 2013. Why do I come? To see 2,000 of my closest friends, obviously.
Makes sense.
But more seriously, I mean, it's an opportunity to meet competitors, my reinsurers, brokers, analysts, investors, rating agencies, and in a 3-day period you have to work pretty hard, but if you do, you can cover a lot of ground very quickly. And I think the value of communication can never be underestimated.
Very true.
And if I was saying to people in my firm time and time again, it's not about saying it legally correctly or factually correctly. It's about making certain the person you're speaking to is understanding what you're saying. And the best way of doing that is face-to-face contact and listening carefully to what's said to you, saying it back in your own language to make certain you've understood, and developing that relationship. The insurance industry, thank goodness, still is a very much relationship-dominated industry.
Yes, it is.
I think that's what it makes such fun for all of us. I think you enjoy doing it.
I love it.
And why do you love it? You love it because of the relationship with people, really.
Yeah. And because it's a fascinating industry.
Yeah, it is. I think in terms of the bigger world, few people realise just how fascinating it really is.
Yeah.
And the challenges that we have. I mean, I've been privileged in my lifetime in insurance to meet countless CEOs of really large companies and CFOs and government ministers or whatever. I'd never have met those people outside of the insurance industry. It's been a marvellous privilege, great fun.
That's very interesting insight. I have to ask you one last question. I promise this last one. Do you think there is any real chance that the referendum in the UK on membership in the European Union will take place, and what do you think might be the outcome?
Oh, I don't know what the outcome's going to be.
No, nobody does.
I think it's likely to take place. I worry about Europe. I have done for a long time. It's not like the US where you have a federal government. There is no federal government in Europe, yet they share the same single currency with completely different fiscal priorities around Europe. I've never thought that that could necessarily work over time, and it's certainly showing signs of stress at the moment. Do they actually have to have a common currency? I'm not sure. Does the UK need to have a good relationship with Europe? Yes. Can any country in Europe afford to be controlled by Brussels to the nth degree? And I think probably if you push me on that one, I'd probably say no. There needs to be a balance. And I think part of what's going on at the moment is people are saying, is the balance in the right place? Or is there too much control? And I think if you push me, I'd say we've moved too far towards central control and not left countries with enough independence to get on and run their own countries.
Interesting insight. Thank you very, very much.
Great pleasure. Thank you.
Fascinating.
Thank you for the time. Appreciate it.